Hello everyone, welcome to today's webinar. My name's James Hughes, Chief Market Analyst at Scope Markets. Guys, thank you very much for joining me today. I hope you are all well. I hope you are living through these incredible times that we've got at the moment and you are healthy. That's the most important thing I want to get over to you. I hope you can continue to be healthy. I hope you can continue to listen to the advice of your governments and the country and continue to keep this, what we have at the moment, under control. So I hope everyone is happy and well. Today we're going to talk about, and we've got webinars all the time at the moment. So we're talking through today how to trade the news, basically, how to trade the fundamental news and what it is and where we go from it, and all of the things that go around there. So we'll look at the MT4 platform. That's where we are now. So what you can see in front of you is the MT4 platform. But we will also have to have a look at some other things. I've got a couple of slides for you that explains fundamental news, as well as a few other things as well. There is a Q&A panel, guys. There is a Q&A panel. If you have any questions, if you want me to look at any charts or any markets at all, then of course, by all means, please just let me know. Let me know, and I will go through all of them and try and have give you some information. So we'll cover off towards the end. We'll cover off some technical sides of trading as well. And as I said, if there are any charts you want me to look at or anything like that, I am a qualified technical analyst. So I am more than happy to help you out with any of those things and see how these markets are moving. Of course, it is an absolutely crazy time at the moment. So the way markets are moving is insane. And we have seen just today, you can see the market movements that we've seen. But just today, we have seen more announcements by central banks. This time, the Federal Reserve pumping more money into the economy to try and stave off any sort of movement. So that's the key thing that we've got going on, and we'll talk about how we look at the news flow and all of those different things as we go through. So what I want to do is just show you. Share something else with you. We'll talk about the difference between the fundamentals and the technical analysis, the differences between the two. And I've got a little slide here that just gives you the information, the basic information. Just to let you know, some people like to know how long we'll go for. We will probably go for around half an hour to 40 minutes, 45 minutes. So if you do have any questions, if we go a little bit longer, then of course that's fine. But by all means, please do let me know if you do have any questions at all. So fundamental and technical analysis. Well, what's the difference? So why do we always talk and we always hear a number of different people come out and say, well, the best form of trading is the trading that marries fundamental and technical analysis together. But what are they? What is the difference? Well, today we're talking, the title of today's webinar is how to trade the news, which basically is fundamental trading. So when we talk about the news and trading news, and people will talk about trading news, that's fundamental trading, okay? Now, technical trading, technical analysis, you have fundamental analysis and you have technical analysis. Technical analysis is the study of charts. That's something else that we will cover. We will touch on a little bit later in today's webinar, but there are webinars as we go through the week on all of these different things. So please feel free to sign up. We're doing webinars every single day at the moment. We know people are at home. So please feel free to join any of the webinars that we have available. So fundamental trading is trading the news. Technical trading is trading the charts, reading the charts to make our trading decisions. Now, as I said at the start, the best trade puts the two together. But let's look at the points we have here. Fundamental analysis is the study of the news and external factors to an asset. So when we talk about an asset, well, that means either the Dow Jones, it could mean dollar yen, it could mean dollar CAD, any currency pair. Or it could mean an individual commodity like oil prices, like natural gas, even coffee prices, and it obviously could mean stock markets, so individual stocks. Now, the fundamental news that is released around all of these different things are very, they're very different. There are some things that transcend all of the stories, which means that every aspect of every market is dominated by some global stories. Now, of course, the situation that we are in now, the coronavirus pandemic, that is a global story, as we know. We know the world pretty much has a closed sign on it at the moment. So the situation being that is something which is dominating all markets. We'll talk through a few of the others as well, but that's something that's dominating all markets. Now, so we said they had their external factors that look at individual assets. Well, let's look at what they could be. Well, we're talking about news, anything that comes out in the news. We're talking about geopolitical events, so war, basically, war of any or conflict or disagreement between various different countries. Earnings news. Earnings news are anything that comes out about a company. So a company will have a quarterly earnings and a full year earnings. They come out, the quarterlies obviously come out 3 times a year. Then the full year earnings will come out at the time of the Q4 earnings. So that would give you the indication of how a company is performing. Macroeconomic announcements. Now, something we will always talk to you about is to check the economic calendar. What's on the economic calendar? What's moving the markets? What are the big stories we're going to be following during the day? Now, I will show you an economic calendar. I will show you exactly what I use. And I will show you that a little bit later and talk through what the economic calendar is and what sort of things come out of that. So macroeconomic announcements are the next thing on there. So and all of these things are examples of fundamental data. Now, obviously, at the moment, we're being dominated by the first one on that list. The first one on that list being the news flow. That's what we're dominated by. Okay, so that's a key thing, is that we're not always focused on a lot of other things. We're focused on just one story. And when it becomes a big story, as I just underlined here, is that news. When it becomes a big story, then the situation is that we're dominated by that. And of course, it is coronavirus. Now, if we look at exactly what we're doing here, we know coronavirus it's the biggest story, and I'm just writing this down so you can see it. Coronavirus is the biggest story we have seen in financial markets, and this is going to surprise you, since World War II. That is the key point. Coronavirus is that big a story for the global economy, for the markets. It is enormous. Now, a lot of the people are trying to pin this to the fact that it's very much like the 2008 crisis. It's far bigger than the 2008 financial crisis. Now, I'll talk to you a little bit more about that financial crisis in a moment. But when we realize that the economic impact, the economic impact of the 2008 financial crisis was that markets were hit and economies went into recession. Now, we turned economies round, and we looked at GDP numbers falling aggressively, and they fell to maybe 1% or minus 2% or so. The expectations of how an economy could fall in the next year are that we could see a fall of around 10 to 14% in GDP, which is enormous. So that is how big this situation is for our markets. You know, that's how big things are. So, so news, geopolitical events, earnings, macroeconomic announcements are all examples of fundamental data. When looking to trade fundamentally, so to looking to trade as a fundamental trader, we're looking to gauge the effect that a data or a story will have on the instrument or the market that we're choosing to look at, right? So that's what we're looking for. Fundamental data does not just affect the pairs and instruments that you trade. So what I mean by that is a situation where you may be trading on, say for argument's sake, you're trading on a stock. Maybe you're trading on Apple stock. Let's take that as a very broad example. So say you're trading on Apple stock. Now, you could very easily say, well, I'm not going to look at the economic announcements, or I'm not going to look at various different things in the market because they don't really have an effect on Apple, on how Apple shares move. But if you look at this story now, this story, coronavirus, has a massive effect on everything. And you could also take that to the account that if some economic data is coming out of the US, it may not have anything to do with Apple. But if something is coming out and it affects the US economy, then that has a knock-on effect on the stock markets. And if the stock markets then fall or go higher, then that has an effect on all of the stocks within that stock market. Now, if Apple is one of the stocks within the Dow Jones or the S&P 500, which we know it is, then that will have an effect. So it's a matter of looking at that. Now, for argument's sake, we could look at the start of the year, we were all talking about the US-China trade war and the potential of a deal being signed there. Now, there was a time at the start of the year, before coronavirus was one of the biggest stories we had, that when markets moved, when data came out from China, that would have an effect on US stocks. So if I was buying Apple shares, I wanted Apple shares to go up, and some economic announcement came out of China, if China was particularly positive, that would then have a negative effect on the US, which would have an effect on the US economy, which would then have a detrimental effect on US stock markets. And if Apple shares are within the stock market, which we know they are, Dow Jones and S&P, that would have a detrimental effect on Apple shares. So that's how far and wide-reaching these things can be. So that's our fundamental things. On the other side here, we have the technical. So technical analysis is the study of price action, charts in order to predict market movement. Technical analysis rests on the presumption that levels or prices that were important in the past will become important again in the future. So that is something around technical analysis. Now, we'll cover technical analysis a lot more when we go through to do a few other things at a later date. Just bear with me 1 second, just as I... Okay, right, we are ready. So, actually, I just want to ask everyone a question. If you could answer this for me, that would be fantastic. We have done this webinar at 4 till 5 in Nairobi. Now, is that a good time for you guys? And would you like to see webinars at different times, maybe later in the day or maybe earlier in the day? Or does 4 till 5, or is that a good time? If at some point during this webinar here, you could answer that question for me, just send it through on the chat and that'll be fine. That'd be great. If you could answer that for us, that'd be absolutely brilliant. And it very much helps us get the right time for the webinars for you. I know we have 3 webinars at the moment, so very a lot going on. So, okay. Let's just have a look at, I just want to go back to the MT4 platform for 1 second and show you something. Okay, so the situation that we have, and thank you for those who are already replying to me. That is great. Thank you very much. If everyone could reply and just say whether 4 till 5 is a good time, or whether you'd like to see them at a different time, please let us know the time if that's the case. So let's look at the way. So we're obviously trading the news. We need to know just how this news affects the market, don't we? We need to know it's whether it's good or whether it's bad for markets. That's the fundamental thing we need to look at. But from a coronavirus point of view, from this situation that we have here, this is an enormous story that dominates financial markets. So let's take this Dow Jones. The best way to illustrate this is the Dow Jones, and just by looking at this chart. Look at the fall that we have had. And we are talking since the start of February, is it maybe? Mid-February? Let's have a look. When did we start? The end of February, 20th of February. That was when the markets really started to fall lower. That was the beginning. This is in the space of 3 weeks. We have seen this movement. So absolutely mind-boggling movement in terms of financial markets. Now, what I'm saying to you, I'm not saying to you that by trading fundamental news, you'll be able to, you would have known that this was coming, and you would have got in your trade, and you would have placed your trade, and you would have sold it up there. I'm not telling you that at all. Let's change that so people can see it. I'm not telling you that at all. And that is fundamentally not the case. Okay, so we would not have that situation where that would happen. If you sold up there, then you're very lucky. Okay, and we have to remember there is one thing that we all have in common, and those of you that came to my seminar when I was in Nairobi previously, you would know that this is the case. But the one thing that we all have in common is the fact that markets, nobody knows where the markets are going. You don't know, I don't know, central bankers don't know, nobody knows. Now, yes, there is a degree of guesswork we can do and analysis that we can do, can try and make our mind up, which is why looking and trading at news means that there are that we can gauge positive or negative reactions. Now, I want to take you to something which has happened today, and I'm just going to bring you this situation here. Now, let's share this page right now. Now, I'm just going to go to my Google page here and just want to share something with you. Okay, so I've just Googled the Fed here, right? Because we've seen an announcement today. Now, today we said the Fed announces, and let's go to this story on Market Watch. So, but a lot of people ask me, where are the various different places I can get my fundamental news? Well, there are a whole host of websites. There are a whole host of websites you can go to for market news. Obviously, Scope Markets, we offer some news which is written by myself, but there are other areas as well. And this is Market Watch, a very famous page. So let's just look at this. Fed announces unlimited QE and sets up several new lending programs. So this is the third time the Federal Reserve in the US have acted. Now, let me just read this first paragraph for you. The Federal Reserve on Monday announced it would purchase an unlimited amount of treasuries and mortgage-backed securities in order to support the financial market. The Fed said it would buy assets in the amounts needed to support smooth market functioning and effective transmission of monetary policy. Now, this is basically what the Fed are saying, is that this is unlimited. They will buy as many government bonds as needed. Now, for those of you who don't know what quantitative easing or buying government bonds, which are basically the same thing, what that means is it's basically printing more money. It's basically putting more money into the financial system. And if you put more money into the financial system, then you would hope, and the hope is from the Federal Reserve, that two things happen. Number one, people start having more confidence in the economy, and businesses continue to move forward. And there are two things that you need for an economy to perform well. Number one is spending. Number two is lending. So you need people to spend money, so individuals to spend money, and you need banks to lend money. If those two things can happen, then you have an economy which is moving. Now, at the moment, because of the coronavirus story, we don't have that situation. People have no confidence, so nobody is buying anything, apart from people who are panic buying food around the world, as we've all seen on the news. So people aren't spending their money on anything other than food and the basics. And the banks aren't lending any money at the moment because there is a worry about the future for these financial institutions, which is why the Federal Reserve puts more money into the system to say, we are going to prop up the economy. We are going to make the economy perform better, artificially stimulate it, and we're going to continue to do that. This is what today's announcement says. We're going to do that for an unlimited amount. So unlimited amounts of QE. Now let's get this in perspective, and let me just search this because I don't know the actual answer. Fed stimulus 2008. How much did they spend in 2008? Here we go. Let's look on Wikipedia. There's always the answer for us. So always give us an answer if it comes up. Here we go. Right. How much was spent? The total cost of this bill was projected at $152 billion. $152 billion worth of quantitative easing. That was in 2008. already the Fed have announced a $700 billion asset purchase plan. In addition, the Fed announced several new lending programs worth $300 billion. There's $1 trillion worth of quantitative easing and measures there. And now they've also announced an unlimited amount of QE. So on top of this, they will also do whatever it takes to do it. So whatever money there is. And also there is another story going on. And that story comes out of the US again, because it doesn't come from the Fed, it comes from the Treasury. The US markets, the US government are trying to add a further $1 trillion worth of aid. And this is in the form of something with these small loans to businesses and helicopter payments to various to households. Now, what helicopter payments are to households, that is when the government just gives a family of four. So this is what it is in the US. It gives a family of four $3,000 per household. It just gives it to you because of how the market is performing, how the economy is likely to perform. Now, there's a lot of people that would sit there and say, you're going to give me $3,000 for nothing. That's fantastic. But imagine how bad the Fed and the US government thinks this issue will be in the future, that it's giving people cash in their hands. That is how bad this will be. This crisis will end up being for the financial world. It will be the biggest issue to hit the world economy, as I said previously, since World War II. That's how bad. But from our point of view, we want to know how this affects the markets. So I look at this, I see Fed announces unlimited quantitative easing and sets up several new lending programs. I can already see $700 billion worth of stimulus there, and I can see $300 billion worth of support for companies hurt by the shutdown of the US economy there. So we can see that as $1 trillion plus whatever it takes, plus $1 trillion coming in from the Treasury Secretary. Wow, that's a lot of money. Now, two things happen when stimulus is added to the market. Stock markets go up, the US dollar goes down. In a normal market, in a normal world, stock markets go up, currencies go down. Let's flick back. How has the market moved? Okay. Well, this is on a daily chart. Let's look on an hourly chart. This is today. This is the movement we've seen today. Let me zoom you in. That's the movement we've seen today. From today's open, we're up here. Well, the markets haven't, they're going to open in 7 minutes, in fact. So the US markets are going to open in 7 minutes time, and this is where we're expecting to go. So we could see these markets come all the way higher, start to jump, and this is the situation that we could have. Okay, this is the situation that is likely to be there. Okay, so very, very important that we've seen upside movements. And this is because, of course, this is because markets are continuing to struggle. And because we've added all of this stimulus in, stock markets have started to rally. And we are seeing stock markets rallying. Now, we can't say stock markets are looking to recover because, if I go back to here, that's the fall that we've had. And this is where we've gone to today. So we've still got a long way. We're still in bear market territory. However, if you keep adding stimulus to the market, what the government in the US wants to happen is the stock markets to go higher. Now, the big level for us or for the markets is going to be, not there. Let me just highlight this. The big level for financial markets for the Dow Jones is going to be 20,000. Just around this area here. That will be our resistance level on the upside as markets start to move higher. So markets continue to move higher. This 20,000 level is going to be a key one. Now, we've announced that stimulus, and that's where the markets have gone. We could see more stimulus packages added by the US in the next couple of days. Now, and the reason that the helicopter payments and the $1 trillion Treasury Department bailout hasn't gone through yet is because the Democrats and the Republicans in the US are arguing about it, about whether the best way to do it. So it will happen. It's just how it's packaged up. So when that's announced, we could also see that move higher yet again. So it makes us think, okay, at the moment, there is big upside. However, this does two things to the market. Number one, yes, we see a big push higher, but then the markets start to panic because they think, wow, this really is an incredibly bad time for these markets. It's an incredibly bad time. So panic sets in again. Now, the only thing that heals the panic in financial markets is time, which means we have to wait to see when the markets recover and the panic stops. Because I'm not saying that this big fall is all panic, but what we are saying is that this is a situation where it's unprecedented, it's uncertain. We don't know the outcome. And that's going to be the biggest issue, is because we don't know. Now, what often happens in a situation like this is we get this upside, which we've seen, markets rallying higher. It's turning around at around this 20,000 level. I bet it's nowhere near that. It's probably 100 odd points out. But still, markets turning around at this area and it's coming back down lower. Okay? This is almost a 400-point move here. So these are massive moves. Look where this market was earlier. Let me just get the crosshair in and just to see how big these moves are. This is 18,553 and the high up here, 19,916. Massive, massive numbers. 1,400 points. So massive numbers. So the turnaround in these markets from this point of view, where the market starts to rally off, is not something that's uncommon. Now, everybody knows about the non-farm payroll. And whenever you speak to anyone about trading the non-farm payroll, we often say when the non-farm payroll comes out, you get one reaction one way and you get another reaction. So you get an initial reaction and then you get the market start to calm and then you get a second reaction. Now, on the non-farm payroll, this all happens within 2 or 3 minutes because it's a fast-paced economic announcement. Bang, it comes out. Bang, we're stuck. Then we have another movement. This is longer term because, of course, we're thinking about what this means going forward. This is a massive stimulus plan. It's a historic stimulus plan. So what happens going forward? So how do we trade it? What do we look? Well, we wait for the market to calm itself down. As I said, the only thing that calms panic in a market is time. So we have to give it some time to react. Now we wait for this to calm down. The market would then, we don't know that this is going to completely wipe this move out, but I wouldn't be surprised to see whenever the market's up on the daily, I wouldn't be surprised to see this finish down today. And that is why these markets are so erratic. So you understand why these markets are moving. Hopefully, is everyone understanding what I'm saying? Please reply and make me feel better. Hopefully everyone's understanding how I'm explaining this. So what we then have to look at. So as these markets move, we said that stimulus packages are positive, very positive for so these stimulus packages are very positive in terms of stock markets. Now, usually that means, as I said earlier, stimulus packages are positive for stock markets, negative on the currency. Now, I say on the currency, we're talking about the US now. So that means I'm talking US stock markets and the US dollar. So let's look at the US dollar and see how that's performing. So we go to, let's look at Eurodollar. So it's an honest pair. That's the movement we've had on US dollar. No, not today. This is from the start of the crisis in the last couple of months. And this is just from March, start of March. This is the downside we've seen. But as you can see today, the euro is trading up. Now, in a situation, this is euro dollar. So remember, any upside is euro strength or dollar weakness. If it starts to fall, that's dollar strength, euro weakness. So the situation that we're in at the moment is the fact that as this market moves higher, and we're in this situation here, the stimulus has been added in, the dollar starts to fall. And this is what we're seeing here. Okay, this market's going up, but remember that's euro. That's euro dollar, so it's dollar weakness. So stimulus means it's dollar weakness. However, you can see that this is not as aggressive as it had been on the stock market. So if I just show you this, show you where we are here, on euro dollar, we've seen a similar move. Let me just connect these highs. So on euro dollar, we've seen similar moves. Okay, so the moves have been slightly subdued, and that's because the US dollar is acting as a safe haven, which means the old adage of we see one thing on the stock market and one thing on the currency is slightly to the side on this, because the way the markets are moving means it's positive news stock markets, and yes, it's negative for the US dollar, but that doesn't stop people buying the US dollar, because the US dollar is a safe haven. And a safe haven means it's where people put their money when at times of struggle, at times of crisis. So the dollar is going higher because people look for the safety of US denominated assets. And that's the situation that we find ourselves in. So stock markets are going up today. And yes, the dollar's going down to a small degree, but not massively. Now, the best way to show this is on the dollar index. So let me just grab you the dollar index. That on your MT4s and on your MT5 platforms, that is DXY. That's the dollar index. And that's a basket of all of the currencies, of the whole US dollar. Now, I hate this green, so I will change the template to have my template on it. And I have to do this as well. There we go. So you can see this situation now. That's hourly. Let's go daily. Look at the strength. We've seen so much in the way of stimulus. This is the complete inverse to how the market has been moving. Stock markets have fallen very, very aggressively. The situation now leads us to a fact where the US dollar is gaining because it's a safe haven. And it doesn't matter that we've seen so much stimulus added in within this area, because the market is still rallying. Okay, the dollar, the currency doesn't care about the stimulus, because this situation is so unheard of. It's such a complete unknown for the world that people are scared. Investors are scared. So they're going to the safe havens. They're buying the US dollar. So any situation that we see here where there is a brief sell-off has to be buying opportunities for us. Now, where do we trade? How do we trade it? Well, we look at areas and say, okay, where are the support and resistance levels? I had one in there. Support 101.59. Excellent place to buy in and rally this higher. Where's the next one? Down at this low here. Excuse me. Down at this low here, 101. It's 100.99, but 101. That's the other area. Two areas, two very key areas. And even if we don't believe that the market is going to rally this much, we can still say, okay, I'm not going to be greedy. I'm just going to rally the dollar index in this range up to 102.98, 103, because I can see there's a range between the high and the low here. The market's bouncing around within this level. So maybe I look to say, I'll buy it around one of these levels, 101.60 or 101 on the low, because I expect it to bounce. I'll have a stop loss, because of course that's always the best. You must use the risk management tools. It's one of the most important things that we have in the market within Scope Markets. And we have a webinar on risk management and how to use your stops and losses and limit orders coming up later in the week. So please sign up for that one. The situation here is we say, okay, I would like to buy it around this level, but I'll place my stop loss just below, maybe around there. Protect myself. If I'm wrong, I'll get stopped out. If not, I'll rally higher. And that's the situation we're in. Where's the other level? It's down here. We can see it. Just there. Perfect. So 3 key levels where if this market comes back in, it's due for a move. Now, we also have something on here. This is where I'm getting a little bit more technical. So the fundamental, we know the fundamental story. We know what that is, that the fundamentals, and let me just choose to share something else with you quickly. Just share this. So we know the fundamentals, the fundamental side is studying the news, studying the economic calendar, and we'll show you my economic calendar in a moment. But the technicals marry the two together, and that's really important. So how do we marry this together, this fundamental story that we're talking about with the stimulus? How do we marry that with stock markets? Marry that with technicals? Well, there's something here that we've got sitting in here, which is a head and shoulders formation. One head, one shoulder, one head, one shoulder. And this is inverse, an inverse head and shoulders. So let me just annotate this for you so you can see that. Number one goes there. It goes right there. So that's our right shoulder. Yeah. We have another one down here, which is our head. And we have another one over here. Which is our right shoulder. Oh, look at me, don't know my left from my right. This is obviously a left shoulder, this one. But you can see the situation here. I can't change that for some reason. You just have to take my word for it. That is left shoulder. That I do know my left from my right, and I don't think there's two right-hand sides. I just can't change that for some reason. It won't let me change it. But you've got a shoulder, head, shoulder. Now, the situation that happens here is that you see the movement coming from this point of view. And this is a correction pattern. So we could see the market come off and come lower, break below these. This is continuation pattern, sorry. So we could see this continue, push higher again. Right shoulder, head, right shoulder, break out of this upside 102, sends us all the way higher still. And we would say that the US dollar is still very, very, very much the safe haven of this market. That is very, very much where we expect to see these markets going. So that's the kind of key thing that we have to look for. So from our market point of view and our fundamental analysis point of view, that's how we trade this news, and we add it with other things. Now, there's not just the coronavirus story at the moment. Of course, it is the dominating factor, and that is always going to be the case. Someone's asking me a very good question here, actually. What role does your time zone play when using either technical or fundamental analysis? Well, obviously it plays quite a big role because from a fundamental analysis point of view, from you guys, obviously 1:30 for me would be when, and I'm in London, so 1:30 for me would be the time when the most amount of economic data is released. Okay, now that's 4:30 for you. Now 4:30 in Kenya would be a really key time in the market, because at the moment it's when financial markets open, because there's an hour delay in the clocks, and it's when a lot of the data comes out. Okay, now the data comes out a little bit earlier at the moment because of how US markets are an hour behind. So 1:30 is the time when the markets will open. 12:30 is when the economic data is released. Okay, so you can see, if I just show you one thing here. Hold on a sec. I'm just going to change the share here and show you my economic calendar, as I said. So from our trading point of view, I want to show you this screen, and sorry for me having to play around with the size of it. Now, I don't use anything particularly snazzy when I'm using my my economic calendar. I just go to fxstreet.com. Now, it's one of the most key. It's a very well known platform. Okay, it's always been around. There are other economic calendars. Forex Factory has a very good one. Investing.com has a very good one. Some platforms have their very own one. Scope Markets has its very own one on its website. So there's all these different things. But this just shows me when the market moving data is coming. Now, I know today, this is in my time zone here, obviously. This is all my time zone. I know today there's not much coming out. I know at 12:30 we had the Chicago Fed National Activity Index. But you can see that this isn't a massive thing. But we know the Senate will vote on the coronavirus bill at some point during the day. Now, that's the $1 trillion worth of stimulus that I was talking about earlier. That will be voted on in the Senate at some point later on today. So I know at some point that that's going to happen. Let's go through to the next couple of days. We know there's a whole host of data coming out of Europe. So if I look at 8:30, now I'm 3 hours behind you. Okay, so I'm 3 hours behind you. So 8:30 is 1:30 your time. Okay, so if you're doing, sorry, it's not 1:30 your time. What am I talking about? It's 11:30 your time. So we can see that the PMI data will come out 1:30 your time, 8:30 my time, 11:30 your time, 8:30 my time. 9 a.m. is key again tomorrow. Data coming out from the UK is a lot of data coming out. FPC meeting minutes is another key thing. So I will look through this on a daily basis every single day. Now I know that the market isn't dominated by this, but still, it's a really, really important thing to look at. Okay, and we must make sure that you focus on this every single day because everything in here moves the markets. Okay, now in a normal time, we know that this would have more of an effect on the market than anything else. But still, from an RBA, from a of the coronavirus point of view, the coronavirus is dominating, but this is still important stuff. So looking at these is really important. IFO survey next week. We've got UK inflation on Wednesday, US durable goods. Now, a key number that we have to look out for at the moment is now obviously there's the Bank of England meeting interest rate decision here. Now, the Bank of England have already made their decision, so we don't expect to see any more rate cuts. But there's a new Bank of England governor, so Andrew Bailey may be looking for more of an impact. But what's key, we'll get two things on Thursday. We'll get GDP from the US. Now, this is for Q4. Q4 2019, there was no coronavirus. So expectations are for 2.1% growth. We know that this is such a delayed number that this pretty much means nothing. And usually it would be a massive number. So it will be ignored. But this is the key one. And you look at the difference here. So the initial jobless claims. So this is how many people claim job seeker allowance in the US. And it's every week. Last week was 281,000. This week it is going to jump to 750,000. And it could be higher. That shows you that people are losing their jobs in the US. And that shows you that this coronavirus story and the impact it's going to have on global economies, on the financial markets, and on how we live our lives is going to be monumental. It's going to be monumental. And it means that we will see more and more stimulus added by governments and measures taken to make sure people don't lose their jobs. But as you can see, it is having an effect. I have a question here. How would the $1 trillion US dollar bill affect cable? So sterling versus the US dollar. Well, let's take a quick look at cable. Let's jump in here. Well, it's likely to be slightly US dollar negative, as we said earlier. So that would give sterling a little bit of upside, which is what we're seeing from this point of view here. So this is today's trading, and we are seeing a bit of upside. Let's jump in on the 15-minute here and see this. You can see this is the jump that we've had. We're still down on the 23rd on today's trade. Look, from the highs, still down, but you can see markets are moving, and they're giving it a go at the moment as well. But these are very erratic, so I would be looking 15-minute chart. I'll be looking at this high. If I see a break of this high, 117.13, then I'll take us to this trend line But from this point of view, there is some upside here because this has just been announced. So I can see the US dollar under a little bit of pressure over the next few hours. However, what we expect to do, must remember that these currencies are two different countries. So yes, there's been stimulus announced today by the US, which is negative for the it's negative for how the US dollar has been. But later on this afternoon, expectations are that the Chancellor of the Exchequer in the UK, Rishi Sunak, he could come out and announce more stimulus in the UK, which would be negative for cable. So you have to be aware that there's two things going on. And the expectations are that we could see the UK go into lockdown today. So that could also be negative for sterling. So we must keep an eye on stories like that. Okay, so that's going to be very, very key to look out for. Okay, guys, I think I will leave it there. I think I'll leave it there for today. Thank you very much for joining us. And it's a pleasure to talk to you. Make sure everyone keeps safe, keeps well. We have webinars every single day in Kenya. Every single day, 3 times a day. So please, please, please join us for our webinars. I will be doing one every single day at the same time, 4 till 5 this week. I've seen what a lot of you have written in your comments today. We will try and change a few so they're at a slightly different time. But I will have one at this time every single day for you. Every single day this week. And if we get enough people joining, I will do them into the next week as well. So thank you very much for joining me. And please feel free to continue to join these webinars. And we hope we can educate you and continue to help you to push on in your trading journey. We're here to help the whole time. So please join us every single day, 4 till 5. Thank you very much for your time, guys. And I will speak to you again.